Tax benefits and deductions for tax lien and tax deed investors. Tax lien and tax deed investing is not only a powerful wealth-building strategy but also an opportunity to take advantage of significant tax benefits. By understanding the deductions and credits available to you, you can reduce your taxable income, reinvest savings, and maximize your overall returns. In this guide, we'll explore the key tax advantages for investors, how to use them strategically, and the importance of accurate record keeping and professional guidance. Key tax benefits for investors. Whether you're holding tax liens or managing tax deed properties, tax laws offer multiple ways to reduce your financial burden and optimize profitability. Deducting property expenses is a foundational benefit. Investors can claim expenses associated with maintaining and managing their properties. These include repairs to essential systems like roofs or plumbing, insurance premiums for property and liability coverage, and utilities paid during periods when the property is vacant. These deductions reduce taxable income and help offset ongoing costs. Depreciation is another significant advantage for tax deed investors. Residential properties are typically depreciated over 27.5 years, while commercial properties depreciate over 39 years. This allows you to deduct the gradual loss of property value over time, even if the market value of the property is appreciating. This is one of the most powerful tools for reducing taxable income in real estate investing. The 1031 exchange is a tax deferral strategy that allows you to reinvest profits from a property sale into a similar investment. By deferring capital gains taxes, you can grow your portfolio tax-free until you choose to cash out. Deductions for tax lien holders. Tax lien holders have specific deductions available to them, even though they may not yet own the property outright. When a property owner redeems a lien, the interest received is considered taxable income. However, related expenses can be deducted to offset this tax obligation. These include the fees paid when purchasing the lien and any legal or administrative costs incurred during foreclosure. If the property owner does not redeem the lien holder may initiate foreclosure. The costs associated with this process, such as attorney fees, filing costs, and title clearing expenses, are also deductible. This helps ensure that tax lien investors can manage their financial obligations while pursuing property ownership. Deductions for tax deed owners. Owning a tax deed property opens the door to a broader range of tax benefits. Management and marketing costs for rental properties are fully deductible. These include advertising expenses, property management fees, and the costs associated with tenant screening and lease agreements. These deductions ensure that property owners can minimize expenses while maintaining a profitable operation. It is important to distinguish between repairs and improvements for tax purposes. Repairs are costs associated with maintaining the property's current condition, such as fixing a broken window or repairing plumbing. These are fully deductible in the year they are incurred. Improvements, on the other hand, are upgrades that increase the property's value, such as adding a new roof or modernizing a kitchen. These costs must be capitalized and depreciated over time. Understanding this distinction is crucial for optimizing your tax strategy while staying compliant with tax laws. Keeping accurate records. Proper documentation is essential for claiming deductions and avoiding issues with the IRS. Tracking every expense is critical, including purchase costs, maintenance expenses, and taxes or insurance premiums. Receipts and invoices from contractors, utility bills, and related correspondence must be organized and accessible. Technology can make this process easier. Accounting software or apps designed for real estate investors can streamline expense tracking and simplify tax preparation. Ensuring accurate records not only makes tax filings easier but also protects you in case of an audit. Working with tax professionals. Navigating tax benefits and deductions can be complex, especially when dealing with multiple properties or investments. Consulting a tax professional, such as a CPA or tax attorney specializing in real estate, is highly recommended. Tax professionals can help you maximize deductions by identifying eligible expenses you might otherwise overlook. They also ensure compliance with IRS regulations, reducing the risk of penalties or audits. By allowing experts to handle the complexities of tax filings, you save time and effort, enabling you to focus on growing your investment portfolio. Next steps. Leveraging tax benefits and deductions is a game changer for tax lien and tax deed investors. Start by organizing your records and consulting a tax professional to ensure you're taking full advantage of available benefits. For more insights on tax-delinquent property investing, visit taxhouseschool.com and explore our blog for expert tips and strategies. Join the Tax House School Facebook group to connect with experienced investors and gain valuable insights from the community. Start maximizing your profits and building a smarter investment portfolio today.